that the government is reviewing its asset sale and OFS plans in light of the Iran conflict. The Finance Ministry is assessing how prolonged tensions and market volatility could affect valuations and the disinvestment pipeline. Shimi Chaudhary has this exclusive story.
Yeah, what we've been given to understand that the government is reviewing the disinvestment pipeline amid rising market volatility triggered by the ongoing Iran conflict. And in fact, official sources say that the prolonged geopolitical crisis could affect both timing and valuation of planned asset sales. Now, this is important given the kind of sharp market swing and recent correction we are seeing. The government may avoid pushing major stake sales or, for that matter, offer for sales as valuation looks like, under pressure. Now, officials in the Finance Ministry are learned to be closely tracking market condition and investor sentiments while reviewing the overall strategy as far as public sector stake sales plan, especially for the ongoing fiscal is concerned. In fact, if the conflict persists and markets remain volatile, the government could face some shortfall in meeting its capital receipt targets, which includes both asset monetization as well as disinvestment. Now, the broader disinvestment roadmap, however, remains intact. Officials indicated that the market condition will, of course, play a huge role in determining the timing of asset sale, but strategic disinvestment of IDBI Bank, being the most prominent one, continues to remain on track and may soon take into cabinet for the final approval this month itself. Now, on capital mobilization, so far, CPSE dividend receipts stand at 7577 crore, while disinvestment receipt at 15,562 crore, and asset monetization at 18,837 crore. Now, FY26 government set a target for 47,000 crore for both, disinvestment and asset monetization, while for CPSE dividend, it has pegged at 71,000 crore, which pretty much close to being achieved because we are currently at 70,000 odd crore. Now, the government will continue to track the market movements and geopolitical developments before proceeding with any sort of major stake sales, as sharp market correction could impact pricing and investor appetite, is what indication we are getting from the top sources.
Okay. Siddharth Khemka joining in as well. So disinvestment on some of that disinvestment will be on the back burner, IDBI specifically, but banks have an entirely different problem today, isn't it, Siddharth? And maybe a bit of that got buried in the fears of crude above 100. But PSU banks with this Maharashtra bank loan waiver, do you think that the negative sentiment on this pack will continue for a bit?
Yeah, I think multiple factors here at play. The Maharashtra government waiving of the farm loan waiver, there is definitely a negative concern out there that it could impact the borrower sentiment and can lead to further delinquencies in other borrowings as well. But I would believe that today, large part of the sell-off is largely because of the concerns, the inflationary pressure because of the sharp spike in crude oil prices, the global hardening of bond yields, and the expectation that interest rates could go up from here if this war continues and the crude oil prices remains at elevated level for a longer duration. So I think that is the key concern here, and hence we are seeing the kind of profit booking, or you can say the kind of selling pressure in banking and financials, largely driven by the inflationary pressures and the impact on interest rates going forward from the war.